Hi, I'm Nakan Wobi, and I'm the founder of RCN CPAs and Business Advisors. We are small business specialists, really love to work with growing small business owners and those who are just started. Today, I'm going to talk to you about the differences between bookkeeping and accounting, and I usually get that asked a lot of time. And I'm sure you may be wondering, okay, bookkeeping and accounting, most people also use it interchangeably. Oh, I'm doing my bookkeeping, or I'm doing my accounting. So I'm going to share with you 5 major differences between bookkeeping and accounting. The first is that bookkeepers or bookkeeping involves recording and organizing or categorizing transactions in a software or an Excel spreadsheet or a spreadsheet, so Google Sheets or Microsoft. So just categorizing the expenses made, as well as recording expenses, categorizing that. And when I mean categorizing, what type of expense is it, as well as revenue. So recording all of that and organizing that information. Now, an accountant would take that a step further and make adjusting entries, because it's not really just the income or revenue and expenses that make up the books. They're also adjusting transactions. I'll give an example will be your depreciation. You buy an asset like a truck. Well, you're not going to write off in the same year. Even if you did, adjusting transactions need to be created. Or you paid rent for a year, or you made your deposit, your rent payment, your deposit. Well, that's not considered an expense. A bookkeeper may just say, yes, it went through the account, but then an accountant will record and analyze and adjust that properly or the correct way. The second difference between a bookkeeper and an accountant is that a bookkeeper will send out invoices for payment, follow up with customers and clients for payment, and also make payments. So you have some invoices that you receive that are due after 30 days. So the bookkeeper will record that. Well, an accountant, a small business accountant, will take it a step further and analyze the cost of your doing business. What are your margins? And you need to know that, because money could just be coming in and you are spending. But then if you do not do the things the right way, you may actually be losing money, even though there's some money in your account, or you're not making as much as you expected to make. So an accountant analyzes the cost of your doing business or the cost of operations. A bookkeeper should do bank reconciliations. I've seen some bookkeepers of some of my clients who are thinking that that's been done, but it's not. So you have to reconcile your bank statement. That's matching your transactions, because it could be an income or expense, and reconciling that with the bank. An accountant will make meaningful decisions or meaningful suggestions based on the information that he or she receives from the client. And it's because of that information that an accountant will be able to advise you on the direction, both short-term and long-term planning. So a bookkeeper usually will not do that. A bookkeeper also generates financial statements. And with QuickBooks, if you've set things up properly, you can click a button and you prepare or print out the financial statements, which are the income statement, the balance sheet, and the cash flow statement. But the bookkeeper will not understand that, will not be able to make meaningful decisions or see what's going on and analyze the report. That's what an accountant does. An accountant will review and analyze the financial statements and be able to also provide some advice based on the financial statements. A bookkeeper provides the financial statements without any adjusting transactions to the accountant, and also collects all the tax documents you may have received from like your vendors, that's your suppliers who maybe receive 1099s or other tax documents. Will collate all that together and send that to the accountant. The accountant will prepare the return, file the return, also be involved in some tax planning, and provide some longer term advisory service around taxes. Those are the 3 major differences. So you can see that a bookkeeper is really not the same as an accountant. So you may be the business owner and you have a bookkeeper. Well, it's also important to consider getting a small business accountant, right? So you could have your bookkeeper doing all the recordings and making sure your bank statements are reconciled every month, but an accountant goes so much more. The 5 differences I mentioned are: 1, the bookkeeper records and categorizes the information based on the different types of expenses that you have. An accountant will prepare adjusting journal entries periodically, it could be quarterly or annually. A bookkeeper will prepare and send customer invoices, receive payments, apply those payments in your software, and also make payments based on your expenses and so write out the checks, mail out the checks, and make sure that you're on time with your payments. An accountant, on the other hand, would analyze your income and expenses and provide some meaningful information around the cost of your doing business, which you could say is the cost of operations. A third difference is that the bookkeeper does a bank reconciliation. So at the end of the month, your books are reconciled to the bank statement so that everything ties up. An accountant or a small business accountant, on the other hand, will make meaningful suggestions based on the information that they have received. If there are questions, the accountant is able to answer beyond just the transactions. And the fourth I talked about is that a bookkeeper will just click on a button and just generate the financial statement, which is the balance sheet, the income statement, and the cash flow statement, but really will not be able to interpret or make meaningful suggestions on that, or even speak around that. What are the trends? That is what an accountant will do. Reviewing these financial statements of the business, will be able to analyze the trends, ask you questions, prefer some areas of improvement, and work on helping you really make more money, reduce your expenses so you can have more profits. And then the last but not the least is that the bookkeeper will provide the financial statements, the year-end financials, which is really unadjusted because the accountant actually does the adjusting entries, and all the tax documents that you as the business owner would have received and sends it on to the small business accountant, who will then prepare e-file tax returns, also be involved in some tax planning, not just preparation, and then also providing some advisory services around taxes. I hope this has been helpful. Any questions, feel free to post below your comments, and if this was good, a thumbs up, I'll really love that. And then if you have some additional questions about your business, small business accounting, bookkeeping, post your question below and I will be sure to answer that. And if this has also been helpful, please share this with someone, another business owner you know that could benefit from this. In my next video, I'm going to share, if you decide to do your bookkeeping yourself, some tips around ensuring that you do that well. See you on the next video.